Well, it appears the Fed plan is becoming clear. We've got a couple of the Fed presidents already speaking today, and they are singing the same song. We will see if that continues tomorrow. Also, it is becoming clear what is going on in the consumer base. But before we get started with the daily financial news, I want to highlight the discussion yesterday with Simon, the uneducated economist. The uneducated economist opened that session with giving us a thought on the credible threat of interest rates actually going lower. How many of you out there could see through all of the spaghetti and really extrapolate the chances that the Fed might actually go lower simply by buying treasuries? If you haven't seen that discussion with the uneducated economist, good news, it is available on the channel. It was released yesterday evening at 3 o'clock, I believe. Just so you know, that was done inside our school community. And as soon as we hit 100 students, videos like that will live entirely on school. So again, folks, if you want to be a part of the community, I'll put a link below. We have Anna Kelly available tomorrow. And a question for the audience. Would you like to see Dan Bird next Sunday as a part of school? You can ask him about stocks and things of that nature. Let me know. Let me know in the comments below. Would you like to see Dan Bird as a part of the school community on Sunday where you could ask questions and the like? So that was a lot of fun. Simon, thanks for coming back. You are amazing. Let's talk about the Fed. Again, as we talked about yesterday, we have 7 Fed speeches when you combine Monday and Tuesday. We have summaries of 2 of them already, Fed President Barr and Fed President Bostic. We'll go to Bostic first. The labor market is weaker than last year, but not soft. We still have a ways to go on inflation. Again, what does that translate to me? It translates to me they are watching jobs. They have pivoted. They have a dual mandate. It's not all about inflation anymore. And they are going to wait until they see the cracks in the labor market to really consider moving forward. How about Fed President Barr? The Fed is in a good position to hold steady. Watch the economy. We are watching both inflation and employment, aka Fed pivot. Need more time for tight policy to work. So folks, again, so far, 2 out of the 7, they're basically saying the same thing. We are going to wait here for a while. We will not be cutting, nor will we be raising. Again, this could mean no rate cuts at all in 2024. It will be interesting. As we discussed with Dan Bird, I believe in a video that went out yesterday at 6, we have to be a little careful about the CPI reading that is released in June. Because of the base effect, although it is obvious, as you saw in that video, that commodities have rollen over, and that may give us reprieve from a surprise hike. Let's actually do something that I forgot to do yesterday. Tony, congratulations on getting your golden ticket. I should have done this yesterday, but forgot. So Tony, congratulations on getting your golden ticket and your first deal. And I'm going to say Gonyo, congratulations. Oops, upside down. Congratulations for getting your next deal. Again, folks, golden tickets are for your first card. Black tickets are for every deal after that. You can get as many black tickets as you would like. Many people have gotten 5, 10, a couple have gotten 15. So keep on rolling, keep doing the work. Congratulations to Tony and Gonyo. You are doing the work. All right, let's go to the consumer. We got a lot of stuff going on with the consumers. Read several articles about the consumer becoming clear with earnings reports. What do we mean by that? Well, PepsiCo, the lower income consumer, has pulled back. Delta Airlines and Chipotle, high-end consumers are still spending. Walmart took market share from Target because wealthy shoppers are trading down. So what does that mean? Well, that means first and foremost that inflation is a nasty regressive tax. It hurts the folks at the bottom. It also means the folks at the bottom don't have the savings to actually participate in 5% interest. Yes, folks, there are some rich folks out there that have money sitting in money markets earning 5%. That's a lot more than we have seen in a long, long time. Also, we are seeing some folks with discretionary spending do what consumers do all the time. There are these things called switching costs or trading down. Switching costs, what is that? For example, when you used to go to Costco and buy beef, but now you buy chicken. You're still getting the protein, you're just buying a cheaper version. Going to Walmart instead of Target. You are still shopping, you are still spending, but you are going to a cheaper place. Again, this is standard consumer behavior. I would argue, I would suggest, I would guess that this is very much recession-like behavior. We will learn more in the subsequent months. But again, this is typically when consumers pull back. Also, another article I read, wealthy Americans are starting to spend more carefully. You got to think about that. We just had Dow 40,000. We have real estate, at least median home prices, at a record. If you don't know what that means the wealth effect. Folks, on this channel, we have told you for years that getting wealthy is a very simple process. You must create disposable income. That disposable income becomes seeds. Those seeds then become assets. Those assets grow over time. You don't grow wealthy renting everything. You don't go get wealthy listening to crash bros and doomers telling you to do nothing. Putting your head in the sand and hoping somebody is going to take care of you is a recipe for disappointment. I do not know what to tell you. Own your stuff. Next point. Consumers are becoming more price sensitive, according to the Beige Book. Again, the Beige Book is a summary, I think, of 18, might be 15. I think it's 18 different districts. And it's really showing that consumers are pulling back. Here's a little tidbit for you. We are actually seeing retailers cut prices. Folks, we talked earlier about Walmart perhaps taking market share from Target. Well, actually here this week, I think Target reports Wednesday. I think it reports Wednesday. Might be Tuesday. Anyways, Target is currently lowering prices on 5,000 items. Yes, folks, 5,000 items that consumers typically purchase. So what is happening? Again, what do retailers do? When the consumer pulls back, they cut prices. Yes, folks, we are seeing that play out in real time. How about Red Lobster? Red Lobster just filed bankruptcy. Folks, this is part of the process. We must pay for the sins of the last several years. There are companies that gorged on cheap debt, that expanded in the good times. And now the debt is resetting, the debt is unaffordable, and bankruptcy is a way that they can go and renegotiate debt and come out stronger. This is not Red Lobster shutting all its doors, as all the doomers would like you to believe. It is simply somebody using the bankruptcy to clean up their balance sheet, shut down non-productive retail locations, and start anew. We will see more bankruptcies. Read an interesting article about Gen Z. 1 in 7, or 15.3% of Gen Z has maxed out credit cards. Just for grins, I continued reading the article, and apparently Gen X, my generation, has 9.6% maxed out. Baby boomers, 4.8% of you are maxed out on credit cards. Again, folks, people are trying to make this sound horrible, but I ask you, just logically speaking, at what age do you have the smallest balance? I would argue younger. I would argue that it is far more concerning that we have roughly 5% of baby boomers with maxed out cards than it is for 15% of Gen Z. Both are bad. Both are paying 20% interest. Both should pay it off. But I would argue a 50K balance is much worse than a 5K balance. But that is just my opinion. How about Amazon CEO Andy Jassy? Andy Jassy was quoted in a recent article talking about the embarrassing amount of your success especially in your 20s, comes down to one thing. It comes down to your attitude. If you have a positive attitude, you are likely going to be a pleasure to work with. You are going to be offered opportunities, and you will likely grow. If you are a doomer who wants everybody to give you everything, you are not going to last. You are going to be flushed out of the system, and you will be left wanting. I have found this throughout my life. The folks that come in with a positive attitude, that are willing to work, willing to learn, willing to grow, accomplish more, and frankly, are happier. One of the things that I hope comes across on this channel is A, I believe in you, but B, it doesn't matter what I believe. You have to believe in yourself. You have to believe that doing the work works. We can only show you with 12, 15, 20 millionaires each week that it works. But if you don't believe, it doesn't matter. No matter how many people I bring you, it doesn't matter. Teenage moms, Section 8, grown up in Section 8, ninth grade dropouts, $89,000 in debt, never made more than $17 an hour. It doesn't matter who I bring you. If you don't believe you can, you can't. It is just that easy. Folks, at the end of the day, one more quick thing. Have you checked out the Zuber letter? Yes, folks, zuberletter.com is a newsletter that we release with Resi Club Lance Lambert. Comes out once a week. We've now done four newsletters. Do me a favor, go to zuberletter.com and sign up. It is 100% free. It's just another way that we can give value and give back. One of the things I am happy to say is the Zuber letter has a 53% open rate, which among newsletters is really, really high. I am told. I really have no idea, but that's what I was told. But that said, we need more subscribers. We really have not seen the growth in the Zuber letter, and I know there's lots of you out there that have yet to sign up. So do me a favor and sign up. So folks, at the end of the day, I think the Fed plan is becoming clear. They are going to hold on tight with rates right where they are until the job market breaks. Second, consumers are acting like we are in a recession. I'm not sure if it's the typical recession or the rolling recession. I'm still leaning rolling recession, but I could change my mind for sure. Again, folks, check out the Zuber letter. Become part of the school community. We are going to give you opportunities to participate with some legends like Simon, the Uneducated Economist. Tomorrow, 8 a.m. with Anna Kelly. How many of you would love to talk to Anna? Well, congratulations. You have a chance tomorrow. And if you want, leave me a comment below and we will schedule Dan Bird for a talk on Sunday. Take care, everyone. Have fun. You're amazing. Later.